Good morning, guys. Happy Monday. Let's see if we can't get a little bit better this week. So here's what I think we should focus on. Over the next few days and the coming weeks here, we got big time earnings. We got an election coming up. So here's what I think we should focus on. Last couple of weeks here, we get the daily squeezes setting up on the indexes on names like Amazon, Apple, Chipotle, Spotify, Salesforce, DocuSign, you name it. We had all these daily squeezes, and they did a great job of releasing all that energy to the upside. So I think what I'm going to focus on, and what I suggest you guys focus on as well, as we approach this period of, call it uncertainty, with earnings, with the election, is a potential loss of momentum. So it's a general statement, guys, once that squeeze fires, we can continue to move higher and higher as long as we have that bullish momentum. However, as soon as that bullish momentum dies out and gets a bit exhausted, the move is essentially over. So you look at the daily charts of the futures, and we look at the indicator here. Now I'm happy to use the Squeeze Pro, but you guys can use the regular squeeze built into Thinkorswim, or you can check out the link in the description of the video for a good discount on the Squeeze Pro package from Simpler Trading. Now, what I'm looking for here, guys, is do these light blue bars begin to turn to dark blue on the daily chart over the next couple of weeks? And in plain English, that just tells us that we're losing all this bullish momentum. The squeeze is basically over, and at that point, you can expect some back and forth chop, or potentially the beginning of a little bit of a move to the downside. So instead of kind of forcing the issue and blindly jumping into trades to the upside, I think we need to pay attention here to what the market is trying to tell us. Now, while the daily charts look just fine for the SPY, and they look just fine here for the Qs, take a look here at the 4-hour charts, and as early as last Tuesday, the move was pretty much over. So on the 4-hour chart, we're going higher and higher. We're ripping here with all that bullish momentum, but when the indicator goes from light blue to dark blue, it's basically your heads up that the move might be over. Now on the 4-hour charts, things actually got a little bit weak here, and we got the bearish momentum with those red bars on the indicator, but those have since turned to yellow. So plain English here, guys, the easy part of the move is likely over. Now, we might rip right back through those highs and continue the move, but personally, I think it's a little bit unlikely. I think what's more likely is just a bunch of back and forth chop here for the next couple of weeks. So that's just my opinion, but I'm going to focus on what the market is telling me, and I'm going to use the squeeze indicator as a gauge of, do we still have this momentum that got released from that daily squeeze, or are things starting to come to an end? So with that being said, guys, I think right now really important to find those good looking setups where on their own you believe there's a good probability of a move happening in your favor, but then just trading them in a fashion and with a strategy that makes sense given the current market conditions. So personally, if I'm of the mindset that the market is going to chop back and forth here for a bit, I'm not looking to get too aggressive and say naked calls or debit spreads. More so, I'm still looking to find good looking setups, like say a Salesforce, which I took a position in last week. You got a nice looking daily squeeze. You get in your first pullback here, right to that 21 EMA. So I like the trend. I like the setup. You got a squeeze. You're above the 21, yada, yada. Personally, I think the probabilities leans towards Salesforce continuing to make a move to the upside. However, I'm going to respect the current market environment, so I'm going to trade this setup with a strategy that's going to hold up just fine in the event that the market does, in fact, chop its ass back and forth. So on Salesforce, I did a put credit spread giving it time, going to the November 20th expiration, and I gave it some cushion. Selling puts at 240, buying some 230s as protection. So the basic mindset here, guys, is that whether it's a bullish market, a bearish market, a choppy market, I'm looking for the same setups, and I'm looking for setups that, to me, have probabilities of making a move in my favor. But the strategy I'm going to use is going to be determined by the current market environment. If we go and look at the market in, say, a month of August, where we have overwhelming momentum to the upside, you'll catch me doing naked calls. In this kind of market where, we just recently fired a squeeze, potentially the move is over, and with the upcoming earnings, election, all that good stuff, we're more likely to chop back and forth. I'm going to go with the credit spreads. So that's what I did here on Salesforce. Sold puts down here at 240, and if the market does want to chop back and forth, I'm not going to be affected. It's a pretty easy swing trade, and I continue to hold that position as long as we're holding strong above that 21 EMA. It's the same thing I did here at Restoration Hardware. One of my favorite setups in the market right now. Yeah, a beautiful trend. It just pulls back like we would expect right to the 21 and then continues its move. And now check this out. You got a daily squeeze, and it's happening right underneath all-time highs. I love this setup. To me, the probabilities really lean towards a move to the upside, but because of the current market environment, I'm going to trade it with a strategy that'll hold up just fine if the indexes decide to chop back and forth. So just like Salesforce, I gave it time and I gave it cushion. November 20th expiration, and I sold my put credit spread out here at 350, buying the 330s as protection. So I love the setup. Personally, I think everything leans towards this thing continuing to make a move to the upside, but I give myself time and I give myself cushion because of the market environment. So I'm chilling down here in my put credit spread at 350. And it's easy risk management for me, guys. We're underneath that bottom Bollinger Band. This trade works all said and done as long as Restoration Hardware doesn't do pretty much the complete opposite of what I think it's going to do. Underneath all-time highs, beautiful trend, nice daily squeeze, a decent amount of short interest. To me, everything points towards a potential move to the upside. But all said and done, as long as the squeeze doesn't do the complete opposite and fire to the downside, we can walk away with some profits. So all I'm trying to do, guys, in this upcoming, couple weeks here with earnings, election, and all the other craziness going on, finding those setups where I still think there's a good probability of a move in my favor, but just utilizing a strategy in this environment, credit spreads, that I think lines up well with the overall environment. So the one setup I'm focused on here this morning is actually in Google. So we got about a week, 2 weeks here for Google before earnings, giving us a little bit of time to catch a potential pre-earnings move. What I'm liking about it, guys, is you got all kinds of good-looking squeezes here. We got a good-looking 4-hour squeeze. Underneath that bad boy, you got a 2-hour squeeze, and I believe this goes all the way down to the hourly and the 30-minute. Personally, I'll put the attention here on the bigger time frame squeeze and keep it nice and simple. Now, we look at the indexes, and the market is looking pretty strong this morning. While I don't think we're going to rally all week long, we still need to pay attention to the indexes. You're thinking about trading a tech stock like Google, well, guess what? If the Q's rolled over, Google going right with it. So you got to focus on the indexes. However, you got a good-looking 4-hour squeeze here. You can keep it nice and simple, guys. You can even opt to play the 2-hour squeeze. Either which way, I think you can go with this week's expirations, and what I'll be looking for is either a put credit spread or a call debit spread. Now, in both of those instances, you got a bit of protection if this thing doesn't necessarily fire the squeeze and just continues to chop. With the put credit spread, you can still walk away with your max profit. With the debit spread, obviously, you do need some sort of directional move. But with either or, you are a little bit more protected from that choppiness inside the squeeze as opposed to buying naked calls. So that's something I'll be taking into consideration today. Look at the 23rd expirations, see if we can get a put credit spread with a good risk reward, or maybe something, guys, like an in-the-money call debit spread. Buy the Delta 70, this one has about $9 of extrinsic value, so you could say sell those 1650s, and you're looking at a really good risk reward. You do one contract, you're risking $2,400 to make $3,400. Really good risk reward. So that's something I'll take into consideration, but I got my Restoration Hardware, I got my DocuSign, I got my Salesforce positions, and I'm still holding call credit spread here on the Qs as call it my insurance policy. I'll keep looking for those good-looking setups that I think have a good probability of making a move in my favor, but let me have some insurance coming in here just in case the market rolls over. So what we got here, guys, and not necessarily even the market rolls over, just more so kind of chop back and forth and don't necessarily rip. So what I got here, guys, for my quote-unquote insurance policy is October 30th expiration call credit spread. I put this on a couple weeks ago where I sold the 304 calls and I bought the 309s as protection. So regardless of what the market does here, regardless of positions I might take to the upside, etc., unless we come ripping up here and breaking through those all-time highs, I got about, I think it's $2,000 to $2,500 or so, $2,000 to $2,500 or so coming in next Friday with that call credit spread. So I can kind of use that potential max profit, is call it my insurance policy, to still comfortably take opportunities to the upside, all the while knowing if we just continue to chop or sell off a bit, we've got some nice profits coming in. So for me, guys, it's probably going to be a couple of boring weeks here in the market. I'm coming to love that, but earnings, election, things can certainly be volatile here, so my advice is continue to find the setups that work well for you. Those setups, or the probabilities, at least in your opinion, are leaning towards the stock making the move in your desired direction, but then go with the higher probability strategy based on the current market environment. And if the market is going to continue to chop here, if all this energy from the squeeze and all that momentum is pretty much over, we can expect a lot of choppiness at the least. So naked calls, naked puts, those can be difficult. Credit spreads can certainly be a lot more easy in that kind of environment. So I wish you guys the best of luck this morning. If you haven't already, please subscribe. You can check me out on Twitter. I'll put the link in the description of this video for my entries and exits, and I'll talk to you guys soon. Peace out.